Hello everybody, welcome to Chua's Accounting Lessons PH, and this is Lecture 4, International Accounting Standard 1, Presentation of Financial Statements. So now we are starting to break down all of your international accounting standards and international financial reporting standards. And this is your very first exposure in the yung accounting standard, kumbaga. Okay, so this is IAS 1 Presentation of Financial Statements. Let's start. So the objective of this standard is to prescribe the basis for presentation of general purpose financial statements to ensure comparability both with the entity's financial statements of previous periods and also comparing it with the financial statements of other entities. Intra-comparability and intercomparability. IAS 1 sets out the overall requirements for presenting the FSS and then the guidelines for their structure and other minimum requirements. Ano yung content nila? Standards for recognizing, measuring, and disclosing specific transactions are not addressed in this standard, but they're addressed in all other details of the standards and interpretation. So, for example, you're curious on how to recognize, measure, and disclose information about an entity's inventory or property, plant, and equipment. So, if it's about inventory, we have a separate standard for that, IAS 2 Inventory. If you're curious about how to properly present property, plant, and equipment, we have IAS 16 Property, Plant, and Equipment. Okay? So, the details of each line item in your financial statements is not addressed in this standard, but we're talking about here about the overall requirements on how you properly present your financial statements, and that is IAS 1. Now, IAS 1 applies to general purpose financial statements in accordance with the IFRS, and we call it general purpose financial statements because we serve users that are not in a position to require financial reports that is tailored to their particular information needs. So this is for everyone. Because if we will be doing financial statements that are tailored to a specific information need, then that is already a special purpose report or a special purpose financial statement. So this is a general purpose FS. Now, the objective of the general purpose financial statement is basically the very definition of accounting, which is providing information about the financial position, financial performance, and cash flows of entity, and we intended to make it useful to a wide range of users in making economic decisions. To meet that objective, financial statements must provide information about these elements: assets, liabilities, equity, income and expenses, including gains and losses, and then also contributions by and distributions to owners, and basically cash flows. That information, along with other information in the notes to financial statements, will assist the users of financial statements in predicting the entity's future cash flow. So it answers the predictive value na pinag-usapan natin in the conceptual framework, and in particular, also their timing and certainty. Now, IAS 1 tells us that the complete set of financial statements include your balance sheet, which is formally called the statement of financial position, and then the statement of profit or loss or other comprehensive income. It might be a single statement, dire-diretso, starting from profit or loss down to your comprehensive income items, or a two-statement format, which is a separate income statement, and then you have also a separate statement of comprehensive income. And then the statement of changes in equity, the one that you call capital statement, and then the statement of cash flows for the period, and then the notes to the financial statements, which also comprises a summary of significant accounting policies and other explanatory notes in each of the detail of our line items and the face of the financial statements. And the standard also tells us that you should be presenting comparative information. So, for example, your balance sheet should include 2 years as a minimum, which is 2022 compared with 2021. Dapat po, you present your FS na ganun ang style. An entity may use titles for the statements other than those stated above or in the previous slide. All financial statements are required to be presented with equal prominence in a sense that no one is above the other. when an entity applies an accounting policy retrospectively or makes a retrospective restatement of items in its financial statements, when we say retrospective application of accounting policy, kunyari, nag-change ka from, galing ka ng FIFO sa inventory, nag-change ka ng weighted average. So, there is an application of an accounting policy retrospectively. When we say retrospectively, you will be presenting that item as if noon pa ganun na siya. So, i-change mo yung amount nung comparative information na as if ganun na siya noon pa pinresent. So, kung nag-change ka from FIFO to weighted average, you have to present all information na as if lahat sila weighted average talaga mineasure noon pa. Okay? So, kung nagkakaroon po ng ganong retrospective presentation, then you must also present a statement of financial position at the beginning of the earliest comparative period. So, 2022, 2021, tsaka beginning balance ng 2021, which is the ending balance of 2020. So, nagiging 3 years yung presentation kung meron kang retrospective application ng accounting policy. We'll be talking about retrospective and prospective applications of accounting policies and measurement in IAS 8. So, relax. Hindi pa tayo dyan, okay? Reports that are presented outside of the financial statements like management reviews, environmental reports, CSR, sustainability, other statements, those are outside the scope of the IFRSs that we will be talking about. Now, when we say fair presentation and compliance with IFRS, the financial statements must present fairly the financial position, financial performance, and cash flows of the entity. Fair presentation required the faithful representation of the effects of the transactions, events, and conditions in accordance with definitions of the elements. And the application of IFRSs with additional disclosures is presumed to result in having financial statements that has fair presentation. So you have to really apply properly what is being discussed or being told in the standard to achieve a fair presentation. Okay? You have really to comply with these standards. IAS 1 requires an entity whose financial statements comply with IFRSs to make an explicit and unreserved statement of such compliance. In the notes to the financial statements later on, we will be discussing that you should have a statement of compliance with the IFRSs. But later, makikita nyo yan as an enumerated item when we talk about the notes already. Financial statements cannot be described as complying with IFRSs unless they comply with all the requirements of IFRS. Okay? So, hindi po siya nagko-comply sa IFRS hanggat hindi siya sumusunod sa sinabi ng IFRS. Okay? Inappropriate accounting policies are not rectified either by disclosure of the accounting policies used or by notes or explanatory materials. So, when there's an inappropriate accounting policy, it's not right to rectify that inappropriate thing by only explaining it in the notes. So, in the face of the FS, it should be correct already. Or you should use an appropriate accounting policy at the very start and not rectify it just you can explain something in the notes or explanatory material. IAS 1 acknowledges that in extremely rare circumstances, the management may conclude that compliance with IFRS would be misleading, that it would conflict the objective of the financial statements to be, giving proper information for decision making. The entity at that case is required to depart or wag gamitin ang IFRS requirement with the detailed disclosure of the nature and why did you depart and how big is the effect of that certain departure in case the entity thinks that compliance or following IFRS is not suitable for that certain line item or transaction. They really have to explain in the notes. Okay? That's it. Now, you already know the concept of going concern, which is the entity needs to prepare their financial statements as if may forever yung entity, that they will continue in operation for the foreseeable future. The IAS also requires management to make an assessment of the entity's ability to continue as a going concern. So that was a big issue, not really a big issue, but it was a big thing during the COVID-19 pandemic because all sales went down and marami rin naman talagang entities yung nagsara. So, the best example of this was actually the financial statements during the COVID-19 in 2020, prepared in 2020, because there was really a heavy assessment of the entity's ability to continue as a going concern. If they have significant concerns about their ability to continue as a going concern, those uncertainties should be disclosed actually in the FSS. If management concludes that the entity is not a going concern, the financial statements should not be prepared on a going concern basis, in which case IAS 1 requires a series of disclosures. Kapag ka-feeling mo, the entity is not a going concern already. And then we also prepare financial statements using the accrual basis of accounting except for cash flow information, because the statement of cash flows is the only financial statements prepared under the cash basis of accounting. It's not called statement of cash flows if it's prepared under accrual basis, okay? So except for cash flow information, the FSS should be prepared under the accrual basis of accounting. And siguro naman alam nyo na yung difference ng accrual at saka cash basis of accounting. Ilang beses na naulit sa inyo yan. So the FSS should be prepared under the accrual basis of accounting. Now, the presentation and classification of items in the financial statements shall be retained from one period unless a change is needed. You have to be consistent in your presentation. Okay? But those changes in circumstances or changes that are required by a new IFRS, if it's inevitable, syempre, i-apply natin yung mga changes na yun. But those accounting changes are something that we have to discuss in a separate lesson, IAS 8, accounting changes. Okay? But we should achieve consistency of presentation kasi kakaakibat po or magkapatid yan yung consistency tsaka comparability. It's hard to compare things if they are not presented consistently. Materiality and aggregation, kanina tuloy. In the previous video, we have already discussed aggregation. So, medyo kakambal niya rin si materiality in terms of value of information. So, information is material if misstating, obscuring it can, change or influence decisions of the users of the FS that make their decisions on the basis of those financial statements. Each material class of similar items must be presented separately, and the similar items may be aggregated only if they are considered immaterial. Kasi nga in aggregation, we have to balance it in a sense na wala rin po tayong na-hide or na-obscure na important information that might influence the decision of these users of the FS. So the similar items may be aggregated if they are immaterial. Information should not be obscured by aggregating or providing immaterial information. Materiality considerations apply to all the parts of the financial statements, and when a standard requires a specific disclosure, materiality considerations do apply. So you check and balance materiality and aggregation because it might affect or influence or change the decision of the user of the FS. So balance it really, really well. Assets and liabilities and income and expenses may not be offset unless required or permitted by an IFRS. There are certain transactions and there are some concepts in other accounting standards that actually tells us that offsetting is allowed for that specific transaction or item. But assets and liabilities, income and expenses may not be offset unless there is an IFRS requirement that allows you to do so or that requires you to do so. And then IAS 1 also requires you to show comparative information to be disclosed in respect of previous periods for all amounts reported in the financial statements, both on the face and in the notes. So even in the notes to the FS, you should also present comparative information. So let's say, for example, you want to show the breakdown of property, plant, and equipment. So you also have to show the breakdown in comparative information as well. So for example, PPE for 2022 and 2021 in the notes to financial statement, you should also present the details of that property, plant, and equipment in comparative format, 2022 and 2021. Comparative information is provided for narrative and descriptive where it is relevant to the understanding of financial statements. It's all about understandability, actually. A third statement of financial position, that's what I have told you earlier, is required when there is a retrospective application of an accounting policy. It restates items or reclassifies items, and those adjustments have a material effect on the information of the statement of financial position at the beginning of the comparative period. When you say third statement of financial position, so if we're talking about December 31, 2022, you should also present 2021 and 2020. Okay, but we'll be talking more about that, the third statement of financial position, when there is a retrospective application of an accounting policy in IAS 8. Where comparative amounts are changed or reclassified, various disclosures are also required. You really have to explain these things as well, okay? Now, the structure and content of financial statements in general. IAS 1 requires entities to clearly identify the financial statements which must be distinguished from other information in a published document, because usually financial statements are actually published together with the entity's annual report. And more so today, with the concepts of sustainability, we actually present our financial statements together with the annual and sustainability report. So, the financial statements should be distinguished from other information that the entity publishes. Each financial statements and the notes to the financial statements should also be clearly identified. Ano yung statement of financial position, ano yung statement of cash flows, ano yung notes dito. Make it clear. In addition, the following information must be displayed prominently and repeated as necessary. The name of the reporting entity, and in any case there is a change in the name. Whether the financial statements are a group of entities or individual entity. So is it a consolidated one or a separate financial statement? And then information on what reporting period are we talking about. The presentation currency, but we will be talking about that in IAS 21. What is a presentation currency? And the level of rounding used, because for some financial statements, they are presented in terms of thousands of pesos, millions of pesos. So depending on the level of rounding, kasi minsan it's really hard to present the FS kapag hindi ka nag-rounding. Let's say for example, the assets are billions of pesos, so it might be easier to present the FS if it's rounded in thousands or in millions, because some FSs have amounts that are really too big to present if you don't use rounding. So you also have to know, or basically, not know, you really have to say din naman what is the level of rounding used in the financial statements. There is a presumption that financial statements will be prepared at least annually. And that's how we really do it practically. If the annual reporting period changes and the financial statements are prepared also for a different period, the entity must disclose the reason for the change and state the amounts that are not entirely comparable. I had a client before nag-start ng operations February. So, nung natapos yung year na yon, naka-disclose na the financial information for December 31 started only in February. Hindi siya full year January. And then next year, nung nag-present na ng next FS, so comparative na siya. Pero hindi sila entirely comparable kasi yung isang year, full year na, yung second year ng company. Pero yung katabi niyang FS for comparison na amounts is nakalagay din doon that the entity started at this certain date in February. So, hindi sila entirely comparable. So, ganun siya. You really have to explain things to make it more understandable. Okay? Let's now talk about the statement of financial position. An entity must normally present a classified statement of financial position. And when we say classified statement of financial position, you separate the current and non-current components of your assets and liabilities, but you are also allowed to present it on liquidity format if the information will be more reliable if you present it on that format. In either case, if the asset category combines amounts that will be received after 12 months with assets that will be received within 12 months, note disclosure is required that separates the longer-term amounts from the 12-month amounts. Or in the case of a liability, if a liability category combines amounts that will be settled after 12 months with liabilities to be settled within 12 months, then there's a note disclosure that is also required that separates the longer-term amounts from the 12-month amounts. Pero, wag nyo nang pagsamahin, no? It will be clearer naman talaga to properly, and to present it on how we really do it practically in practice, which is separating the current and non-current components. Just that we have to really discuss what is being said in the standard. Pero there are things that you will be learning practically. Okay? It's just that it's good to know din naman na alam niyo yun talagang mismong sinasabi ng standard. Now, current assets are assets, and you know na this naman, you have been in FABM2 in your statement of financial position and how to separate current from non-current assets. So current assets are assets that are expected to be realized in the entity's normal operating cycle, like your inventory, your cash, no, and your accounts receivable, and then primarily for the purpose of trading, like your inventories, expected to be realized within 12 months, and unrestricted cash and cash equivalents. All other assets that doesn't qualify as a current asset will then be a non-current asset, like property, plant, and equipment, investment property, investment in equity securities, and other non-current assets. Now, for liabilities, if it's expected to be settled within the entity's normal operating cycle held for the purpose of trading, the best example is accounts payable that is due to be settled within 12 months, and they don't have the right at the end of the reporting period to defer it beyond 12 months, then that is a current liability, and all of these other liabilities that are not current is basically non-current, like bonds, mga long-term bonds natin, yan po, okay? So that makes your statement of financial position. When a long-term debt is expected to be refinanced under an existing loan facility, the entity has the discretion to do so. The debt is classified as non-current even if the liability would otherwise be due within 12 months. But this term is actually being discussed in intermediate accounting, so hindi po masyado pa nating i-explore. This will be discussed with you further in intermediate accounting. So, IAS 1 has given us the line items to be included in the statement of financial position. Now, I will not be reading this to you one by one, but you can screenshot this. So, this is what IAS 1 tells us, that the line items to be included on the face of the statement of financial position are the following from letter A to R. Okay, and then additional line items and subtotals or other headings may be needed if you really want to. If you think it enhances the information value, if it enhances understandability, then it's okay. When an entity presents subtotals, those subtotals must be comprised of line items made up of amounts recognized and measured in accordance with IFRS. Be presented and labeled in a clear and understandable manner. Be consistent from period to period. So wag tayong subtotal na iba-iba rin yung style natin. Nakakalito yun. It hinders comparability. And it should not be displayed with more prominence than the required subtotals and totals. So sunod tayo sa proper totaling and subtotals natin. Basically, the most basic thing that you do is you present a subtotal for your current assets and then a subtotal for your non-current assets. Then you put a main total for the main assets. That would be fine. Pahirapan yung mga sarili nyo. But, we are parang ang sinasabi kasi ng standard, we are given the freedom din naman to properly present information in a sense that it's, if it brings more understandability, then why not? Pero, ito yung mga main requirements na sinasabi sa atin sa standard. You are also allowed for other sub-classifications like this, okay? Classes of PPE, you can disaggregate your receivables, you can disaggregate your inventories if you think it's really needed. Depende sa kinds ng inventories na meron ka, pwede mong i-detail agad kung anong uri sila, yung mga ganun, okay? So, sub-classifications are also allowed. IAS 1 does actually not prescribe you of any format of the statement of financial position, and the format that I'm telling you is you want it report form, account form, or financial position form, bala kayo dyan. Okay? It's okay. Although in practice, what we use is the report form. Whether the assets is here and then the liabilities and capital are below the assets. Okay? Assets can be presented current and non-current or vice versa. So there are actually countries who do it like that, na non-current muna bago yung current assets. That's okay. Liabilities and equity can be presented current, then non-current din. So, pwedeng current, then non-current. Or mag-start sa equity and then non-current liabilities and then current liabilities. It's actually okay. Net presentation, na ipe-present mo muna lahat ng asset, tapos lahat ng liability, pag maminusin mo sila, may net assets. So, dapat, ang itsura, yung net assets equal sa equity. Pwede rin yon. And then, long-term financing approach used in UK and other countries like fixed assets plus current assets minus short-term payable is equals to long-term debt plus equity is also acceptable. Basta magbalanse. Yung mga dapat magbalanse, bala kayo dyan. Okay? Now, we also have share capital and reserves, yung equity part of the statement, although hindi natin masyadong dadaanan to because the terminologies are still a bit difficult for you. So, medyo relax lang muna tayo dito. Present ko lang sa inyo. You can screenshot. But most of the terms is hard for you if you're not yet taking a preliminary accounting for corporation na class. Okay? So, it's better to discuss this in intermediate accounting. But this is the main requirements for your presentation of the statement of financial position in terms of the equity part of the statement. Okay, now let's go to your income statement or the statement of comprehensive income. The statement of profit or loss and other comprehensive income. Haba, diba? Okay, so profit or loss is defined by IAS 1 as the total of income less expenses but you exclude the components of other comprehensive income kasi ang OCI iba ang presentation niyan. In short, yung kinasanayan yung income statement ng basic accounting na income less expenses na wala pa kayong kamuwang-muwang yung mga OCI na yun. Yun yung sinasabi nating profit or loss. Other comprehensive income is then defined as comprising items of income and expense including reclassification adjustments na hindi nire-recognize as profit or loss as required or permitted by other IFRSs because we have certain requirements or we have things in the standard na sinasabi that these transactions are OCI and not profit or loss. I cannot enumerate them to you one by one pero meron yata ako dito, no? Pero there are items na OCI at hindi profit or loss. But it's hard for you to get everything now because this is an introductory accounting standard class. So it's hard for you to get everything now, no? It's nice though if you will be knowing it now, but it's better to understand in intermediate accounting levels. Now, when we say total comprehensive income, it's the change in equity during the period resulting from transactions and other events other than those changes that resulting from transactions with owners in their capacity as owners, which includes contributions to owners and distribution to owners of equity components na hindi nanggaling sa income at hindi rin nagkaroon ng effect ang expenses at hindi rin OCI. Total comprehensive income is just basically your profit or loss plus OCI and ito po yun. The total comprehensive income for the period is equals to profit or loss in your income statement together with the effect of all other OCI. All items of income and expense recognized in the period must be included in profit or loss unless a standard or interpretation requires you to do so. Some IFRSs or some standards require or permit that some components to be excluded from profit or loss at hindi siya profit or loss kasi ilalagay mo siya sa OCI. Okay? Now, these are the examples of items recognized outside PL and should be recognized instead as OCI. We will not be discussing them one by one because they will be difficult for you guys if we go through all of them, but you will learn this when you are already in your constructive accounting subject. When we say constructive accounting kasi, magkakaroon kayo ng subject na dedicated into the preparation of financial statements. You will actually be repeating IAS 1 that time with more detail. This is an introduction to IAS 1. But by the time that you will be discussing each of the financial statements and how to properly present them one by one, then that's the time that you will learn the deepness and the detail of OCI. But preliminary discussion, these are the items recognized outside P&L and these are the examples of them. So screenshot nyo muna, but it's not expected naman na gets nyo agad yan. No? Kasi hindi nyo talaga mag-gets agad yan kasi you have to go through your intermediate accounting subjects first before you can properly really present a full statement of comprehensive income. This is just, a starting point for you in IAS. Okay, so relax. Don't be too hard on yourself. So, choice and presentation. So, the entity has a choice either preparing them as a single statement, talagang dire-diretso, income, expenses, and other comprehensive income with an endpoint of comprehensive income. Pwede ring two statements. Gagawa ka muna ng separate income statement na ang laman lang income and expenses. Tapos, ang endpoint net income. Tapos, meron kang separate na statement of comprehensive income na ang starting point mo, net income. Tapos, i-adjust mo yung net income na yon na nakuha mo dun sa profit or loss statement dun sa mga OCI natin to arrive at comprehensive income. Pero, whatever the choice in presentation, you must present the following. Profit or loss, basically the net income that you know, and then total other comprehensive income, lahat ng OCI, and then the comprehensive income for the period, which is the effect of your net income and your OCI. And then, an allocation of profit or loss and comprehensive income between non-controlling interests and owners of the parent. Pahapyawan natin ano yung sinasabi dyan. Pag consolidated kasi yung FS or you present the FS as if they are one whole entity, ang tawag dun consolidated, dun sa parent and subsidiary relationship. So, kapag ka po ganun ang presentation natin, kailangan din daw po yung ating income elements or basically your profit or loss and comprehensive income elements, kailangan naka-breakdown. Alin dito yung may control tsaka non-controlling interest. Okay? Basta may allocation dun sa dalawang yon. Now, medyo kailangan ko sabihin na medyo kabisaduhin nyo lang yung part na yan, but you will be appreciating it deeper when you are already in your discussion of accounting for business combinations. Basically, usually third year yun no? So, yung mga pag-allocate natin ng income items or profit or loss items and OCIs, or basically your comprehensive income into owners of the parent and non-controlling interest, those are higher accounting stuff, no? That you will know when you're already there. So, good to know lang tong part na to. Pero medyo hindi nyo pa nga siya ma-absorb for now. Okay? So, medyo good to know lang siya. At least you know. Okay. And then the minimum line items must be presented. So, dapat po yung atin statement of comprehensive income, may lamang ganito. Revenue, gains and losses from the recognition of financial assets measured at amortized cost, finance cost, share of the profit or loss of associates and joint ventures. So, nasa intermediate accounting din po yan. And then certain gains and losses with reclassification of financial assets. And then your main tax expense and a single amount for discontinued items or discontinued operations. Sir, ano yung discontinued operations? Tinigil. Hindi agad-agad ganun yun. No? There's a separate discussion for that. Ano po at paano natin masasabi na discontinued operations. So for now, as it is lang po muna, basahin nyo yung mga required items in your income statement. But for your level, as long as you can do a simple income statement, it's okay. Expenses recognized in profit or loss should be analyzed either by nature, raw materials, staffing cost, depreciation. Ano yung nature no expense na yon? So, ang tawag sa income statement na ang expenses ay by nature, nature of expense method. Pwede rin namang by function. Cost of sales, selling, and administrative. Ano naman yung function ng expense na yon? So, ang tawag doon, function of expense method of income statement. Pero ang sabi ng standard, if an entity recognizes by function, then you have to disclose and provide additional information on the nature of those expenses. Okay? So kapag ka naka-functional presentation, you have to present the nature din naman as a disclosure. So magbibigay ka ng further explanation. The other comprehensive income section is required to present items which are classified by their nature, grouped within those items that will or will not be reclassified to profit or loss in subsequent periods. Ang OCI, medyo hard pang i-discuss sa inyo yan kasi sa constructive accounting pa nga po siya i-discuss. So, dadaanan lang natin yung mga parts na medyo hindi pa masyado for your level. Okay? An entity share of OCI or equity accounted associates and joint ventures is presented in aggregate as a single line item based on whether or not it will be subsequently reclassified to profit or loss. Because we have comprehensive income items that cannot and can be reclassified to profit or loss in future periods. Those things will be discussed with you in your higher accounting subjects. And then when the entity presents subtotals, ano po yung mga subtotals na yon? Ano dapat ang itsura? Line items made up of amounts recognized and measures in IFRS. Then those subtotals must also be presented and labeled in a clear and understandable manner. My consistency, not displayed with more prominence than the others, and reconciled with the subtotals required in IFRS. Basically the same thing that we have discussed earlier in your balance sheet. And then additional items may be needed if you want a more fair representation. And then items cannot be presented as extraordinary items. So wala na po dapat yung term na yan in your financial statements or in the notes. And certain items must be disclosed separately in the statement of comprehensive income or in the notes if material, including the following. So depende po kung paano nyo siya i-disclose, either in the face of the statement of comprehensive income or just disclose it in the notes. Let's now talk about the statement of changes in equity. IAS 1 requires an entity to present a separate statement of changes in equity. Now, for your level, it's okay kung alam nyo palang na capital statement is beginning capital plus investments by the owner plus net income minus withdrawals, ending capital. It's okay. Don't be too harsh on yourself na hindi nyo pa maiintindihan yung mga lawak ng statement of changes in equity kasi on a corporation setup, talagang medyo mahirap ang statement of changes in equity or medyo challenging siyang gawin. So, dadaanan lang natin kung ano yung laman niya na sinasabi sa IAS 1 but don't be too harsh on yourself na hindi nyo pa alam in totality. It's okay because you're in your starting pa lang naman na accounting standard discussion. So, okay lang yan. Okay? But, kailangan daw po sa statement of changes in equity, nakalagay yung total comprehensive income. Tapos yun nga po, nakahiwalay yung owners of the parent and non-controlling interest. Any changes in your application of accounting policies. And then, reconciliation between the beginning and ending amounts of equity. Yun yung alam nyo, di ba? Na beginning balance of capital, tsaka ending balance of capital. Tapos, ano yung naging, so, paano parang sinasabi na ng standard, paano nakarating yung beginning balance sa ending balance ng capital or ng equity? Ito po yung mga items daw na dapat mo ding ilagay. But for your level na ang alam nyo pa lang is beginning capital plus net income minus withdrawals, okay lang yun. Okay lang yun for now. Kasi marami pa kayong kailangan daanan para talagang maintindihan ng statement of changes in equity. Number 1, accounting for corporation transactions. Number 2, yung mismong statement of comprehensive income because you cannot do a statement of changes in equity if you don't know a statement of comprehensive income. So, it will really be on your higher accounting subjects. Okay? So, these things din naman, ito, lalo na to, kapag binanggit ko to sa inyo, medyo hindi nyo pa magagets kasi unless nag-corporation accounting kayo, dun yung magagets yan. But for those who have already took a basic accounting for corporations, then the following amounts may also be presented in the statement of changes in equity or just disclose it in the notes. Dividend declarations and distributions, basically distributions na mismo pala, of dividends and the related amount per share. Okay, so you can present it on the face of the capital statement or just present it in the notes. Now, yung next slide natin, diretso yan ng notes kasi we have a separate accounting standard tackling statement of cash flows. So we will not be going through the statement of cash flows here because we have a separate accounting standard for that, IAS 7. Okay? Statement of cash flows. So diretso na po ako ng notes. Now, the notes of the financial statements, mabilisang sabi, these are all explanations na hindi mo masasabi on the face of the financial statements. Now, the notes must present information about the basis of the preparation of the financial statements and what are the accounting policies that you use to develop your financial statements and to record transactions and stuff. And then you should also disclose any information that was required by IFRS or by our standards. Kasi in each of the standards that we will be discussing, sa mga dulo-dulong part nun, nakalagay, disclosure requirements. In short, ito ang mga dapat mong i-disclose sa notes to the financial statements regarding these transactions. So, sinasabi po natin dito in general, ang notes to the financial statements, dapat laman niya yung mga nire-require na disclosure nung mismong standard na yon. So kapag ka nasa mga next standards na tayo, madadaanan talaga natin what are the things that is required to be disclosed. Okay? And then, the notes must also provide additional information that is not presented elsewhere in the financial statements but is relevant to an understanding of any of them. Notes are presented in a systematic manner and cross-reference from the face of the financial statements to the relevant note. Paano po yun? So, pag sinabing cross-reference, ganito. Sa face of the financial statements, kunyari nakalagay, cash and cash equivalents. Tapos nakalagay, note 7. So, ibig sabihin, para makita ko yung detalye ng cash and cash equivalents, pupunta ako ng note 7. Pag pumunta ako ng note 7, dapat nakalagay sa note 7, cash and cash equivalents. Maiintindihan ko na in detail ano po ba yung detalye ng cash and cash equivalents. Cash on hand, cash in bank, cash in working funds, ganun. Ganun siya. Yun po yung cross-referencing niya from the face of the financial statements going to the relevant note. So, pag sinabing cash and cash equivalent, note 7, pag pumunta ko sa note number 7, kailangan ang laman niya cash and cash equivalents. Yun po yung sinasabing cross-referencing. Okay? The notes should normally be presented in the following order. So, a statement of compliance with IFRS, a summary of significant accounting policies, supporting information mula po sa lahat, isa-isa, ng mga items that you presented in the face of the statement of financial position, income statement, changes in equity, and cash flows, in order which each statement and line item is presented. So, kunyari, ang magkakasunod, cash and cash equivalent, trade and other receivables, inventories. So, dapat po, pagdating din sa ating notes to the FS, kailangan magkakasunod din yung details ng cash and cash equivalents, trade and other receivables, kinds of inventories. And then, other disclosures na required i-disclose, including contingent liabilities, unrecognized contractual commitments, and other non-financial disclosures like financial risk management objectives and policies. And then, we have also revisions of terminology, although medyo old na yung revision din, 2007 pa. So, hindi ko nababasahin isa-isa. You can screenshot this. Meron po tayong mga terms na ginagamit before the 2007 revision of International Accounting Standard 1. And then, noong 2007, nagkaroon ng amendment. Ito po yung mga bagong terms na ginagamit po natin. Now, medyo pang UK yung spelling. So, mapapansin nyo yung recognized letter S, no? Kayo na bahala mag-Z. Ganun po yan. Okay? So, hindi natin babasahin isa-isa. But, that's the change in terms before and after the revision of IAS 1 in 2007. Okay? We're done with the discussion. Let's have a 5-item quiz. Number 1. So, read statement 1 and 2. And then, pause the video if you need more time and play it again when you're ready. The correct answer is D. Statement 2 will be correct if the phrase should also be in accordance with the IFRSs is changed to are outside the scope of IFRSs. Statement 1, the objective of general purpose financial statements is to provide information about the financial position, financial performance, and cash flows of the entity that is useful to a wide range of users in making economic decisions. That's the objective of general purpose financial reporting. So, wala tayong problema dyan. True yan. Okay? Statement 2, reports that are presented outside the financial statements like financial reviews by the management, environment reports, sustainability, CSR, value-added reports, should also be in accordance with the IFRS. Wrong. So, sabi dito, statement 2 will be correct if you change that phrase into outside the scope of IFRS. Kasi po yung mga other reports na yan is outside na po ng scope yan ng IFRS. Okay? Question number 2. Which of the following statements is incorrect? Pause the video if you need more time and play it again when you're ready. The incorrect statement is letter C. Assets and liabilities, income and expenses may be offset freely unless required or permitted by an IFRS. Pwede naman only if it's required or permitted by an IFRS, but they are not offset freely na kung kailan mo gustong mag-offset. Pwede kang mag-offset ng asset, liabilities, or income and expense. Hindi. It's only unless required or permitted by an IFRS. So, ang nagpamali po sa kanya yung phrase na offset freely. Okay? And then A, B, and D is then correct or correct statements. Okay? Question number 3. Which of the following statements is correct relative to the statement of financial position? Pause the video if you need more time and play it again when you're ready. The correct answer is C. Assets can be presented current or non-current, and then vice versa, pwede din. Liabilities and equity can be presented current, non-current, then equity, or pabalik, equity, non-current liab, current liab. Pwede po yun. What makes statement A, B, and D wrong? So A, current assets include cash and cash equivalents that are restricted. Dapat po, unrestricted ang cash and cash equivalents to become part of current assets. When a long-term debt is expected to be refinanced under an existing loan facility and the entity has the discretion to do so, the debt is immediately classified as current if the liability would otherwise be due within 12 months. Hindi po, dapat i-long-term mo na siya. An entity must normally present a classified statement of financial position, separating current and non-current assets and liabilities. Presentation based on liquidity is not in any case allowed. No. Presentation based on liquidity is actually allowed. Diba? Nabanggit po natin yan kanina. Okay. Question number 4. Profit or loss is defined as the total of income less expenses, including the components of OCI. And then other comprehensive income is defined as comprising items of income and expenses, including reclassification adjustments that are not recognized in profit or loss as required or permitted by other IFRSs. Pause the video if you need more time and play it again when you're ready. Okay, so the correct letter is B. Statement 1 is false, statement 2 is true. So wag na natin pag-usapan yung statement 2, true naman siya. What made statement 1 false? Profit or loss is defined as the total of income less expenses. Tama po yun. Yun yung net income na alam nyo. Excluding the components of OCI. Kasi nga po, OCI sila. Okay? Hindi po including. Ngayon, kapag sinabi mong profit or loss, including components of other comprehensive income, naging total comprehensive income na siya. Okay? So, net income is only your income less expenses, excluding OCI. And last number 5, which of the following is incorrect regarding the notes to the FS? Pause the video if you need more time and play it again when you're ready. And the incorrect statement is B. The notes should not provide additional information related to the items that are not presented elsewhere in the financial statements. Actually, we're being encouraged to provide additional information in any case that you don't present it elsewhere in the FS. You're allowed actually to do that. You're encouraged to do that. Okay? Kasi nakalagay dito, don't provide additional information if they are not presented in the FS. No, you can actually disclose additional information if it will make the FS more understandable. Okay? And yung ina-achieve nga natin, yung fair presentation, yung fair representation, or faithful representation. Okay? So A, C, and D is then correct. Okay? So that's our discussion of IAS 1. Please don't be too harsh on yourself kapag hindi nyo pa ganong gets yung mga sobrang lalim kasi it's natural. Some of them will actually really be discussed in higher accounting. But I hope that this is a good starting point for you to learn accounting standards through CFAS. Okay, so that's it. And if you want to know more about IAS 1, pwede kayong mag-advance sa medyo higher accounting na magdi-discuss ng mga financial statements ng medyo may lalim na. You can go to the updates and financial reporting standards playlist also in our channel. You can go to lesson 2. Financial statement is a statement of financial position. Lesson 3, statement of comprehensive income and a statement of changes in equity. And lesson 4, statement of cash flows and notes to the financial statements. So, mas discuss natin dyan in detail yung talagang pagpe-present natin ng financial statements, no? Pero pang higher accounting na kasi yan. But if you want to know more, you're already curious, then you can go to these videos and the links are provided in the description box. Okay, and our next lesson is the next IAS 2 inventories. Again, please like, share, and subscribe to Sir Chua's Accounting Lessons PH and hit the notification bell button. Comment on your questions, suggestions, and reactions in this video. This has been Sir Chua's Accounting Lessons PH. To God be all the glory, honor, and praise. Thank you, and have a great day.